Hello everyone. We're going to look at the practice problem having to do with changes in the stockholders' equity for this week. And the Word document had the beginning balances for the stockholder equity section of the balance sheet, and then it had several descriptions of some events that happened during 2018. So we're going to go through, first of all, it gave the net income. There's no journal entry, or at least we're not going to typically do a journal entry for net income. But when we go to the unrealized gain, that is a debit to the debt securities or a valuation allowance. We learned both. We could do either one, and credit either unrealized gain or other comprehensive income. That's to remind us that that unrealized gain goes in accumulated other comprehensive income. It does not go on the income statement. So that's that transaction. The option plan started out at $15,000, 15, whatever we're rounding everything to, and went down to 9 because of the forfeitures of 40%. So taking that 9, we've already, and we're at the end of the plan. So remember, when we started the plan, we would have figured out how much per year, and then we recorded amount each year. But at this point, the plan is over, and so 9,000 would have been, should be recognized as far as expense at the end of 2018. At the end of 2017, only 7,000 had been earned or recorded as earned, and so we need to get another 2,000 debit compensation expense and credit additional paid-in capital. All right, when we buy back treasury stock using the cost method, we simply take the amount that we're spending and we debit treasury stock and credit cash. For the first purchase, that means we bought back 4,166 shares. For the second purchase, 3,846, or 3,846,000. Everything's in thousands here. So you can imagine 3 zeros behind each of these, all of these numbers. That's how that journal entry the journal entry would be exactly the same, because we don't make the journal entry for the shares, but we're going to keep track of the shares because we're going to need that later. When we exercise the options, or when the employees exercise options, we credit treasury stock, so we're selling them out of treasury stock for the original cost, and debit cash for the 2,000 times 20, and then the difference is additional paid-in capital. Whenever we sell back treasury stock, the difference from what we originally paid for and what we sell it for is a credit additional paid-in capital or a debit additional paid-in capital, depending on which direction. Restricted stock. Now, we briefly mentioned that you can record unearned compensation, but that typically companies do not when the stock plan is set up. Now, if you did, this unearned compensation is in stockholders' equity, and so is these in stockholders' equity. So it has no effect on assets, liabilities, only a rearrangement of stockholders' equity. That's why many companies do not bother doing that. But the earning of the restricted shares, and they're earned over 36 months, and we're 7 months into the plan. So you may have done a whole year, but you should have done just the part of the year, 7 months. 45.69 is the compensation expense. The value is the 23.5 times the 1,000 or a million shares. That's how you figure the compensation. Divide it by the time period. And of course, that's a credit to additional paid-in capital as it's earned, assuming that you didn't do this entry. If you had done this entry, instead of crediting additional paying capital, you would credit unearned compensation. At that point, we have to stop and figure out how many shares are outstanding. We started with 194,516. That was on our original problem. We have bought back these shares. Remember, we mentioned we were going to need the number of shares we bought back. We sold some shares. That makes our shares outstanding go up by 2,000. And then we also the shares that are restricted shares that are earned become part of the shares outstanding as well. So we include that in our calculation, the number of shares that have been earned right over here during that time period. So our total shares outstanding is here. That means that we're going to use the par value because it's a 100% stock dividend. Looks like a stock split, but it's really 100% stock dividend, which means we need to debit retained earnings and credit common stock. That's this number times at a par value of 1 cent per share. All right, so add 3 zeros and then you multiply by 0.01 and you get these amounts. So going down to our, well, don't forget the dividend paid. Once we have this stock dividend taken care of, our new stock outstanding, we pay them the dividend. We take what we had, multiply by 2, and then we get 40 cents per share as dividends paid, and that's a debit retained earnings and a credit to cash. This should be what your statement of changes in stockholders' equity. Notice all of the, well, not all of them, but the things that we've included in our journal entries up top are here. The purchase of treasury stock, we did, you could have done them separately, but I did them together. The shares for the options, compensation earned from the restricted stock, the net income, the dividends paid, the stock split, all of that, or stock dividend, are reflected in the changes in stockholders' equity. The ending balance, then we have our ending stockholders' equity section of the balance sheet. We just pull the numbers from here, as you can see, comes down here, and you could have a total. And we have to fill in some information here about the shares authorized and issued and so forth, and label these the same way. So the columns here are the rows here. Treasury stock, there are two ways of thinking. The treasury stock, when you did the 100% stock dividend or stock split, did you double the shares or not? So depending on the agreement or the stock agreement with treasury stock, it could be that they're left alone, which means that they would be 63 or thousand or so, 63 million shares in the treasury. And if you double them, if you treat them just like all the other shares in order to keep them kind of equal, then you would do twice that many. So no right answer there in terms of how many shares, but you'll see it happen both ways.